Right, let's have a look at Part 2A. Disclose the following categories of assets for the plant cash generating unit in the notes to the financial statements of Medex Limited for the year ended 31 December 2019 in the property, plant and equipment note. We need to include our land, buildings and plant. Okay, please note no comparative amounts, no total and no narrative information. On the right side, I've included steps. Now, please, guys, don't write out these steps. If you do, make use of abbreviations, 1, 2, 3, and abbreviations for you to be able to follow. Remember, this is part of your workings. Okay, my first step will be, I will include my PPE template. You need to leave sufficient lines open to include smaller calculations. Therefore, on a new page, indicate to your marker that this is your Part 2A. Right, they've indicated to us that we need to include our land, our buildings and our plant. Okay, I've included the opening balances and the closing balances. At this point of time, I can't actually remember what to include as the movement, but I leave sufficient lines open to be able to add relevant details, right? Then, second step, and this can be a step throughout your workings, is to include timelines. Remember, you don't have to include details. This is for yourself. I prefer to make use of timelines. And guys, when you look at my timelines, they are skewed. They don't look that neat, but it's for my own calculations. If you're going to make use of your timelines, which replace your calculations, please do that properly for your marker to be able to follow. Okay, number 3, then you need to work through the information from the top in the scenario. Remember, include calculation numbers. Start on new pages with calculation 1. On the next page, include calculation 2. On the next page, include calculation 3. And then when you include smaller calculations within calculation 1, include calculation 1.1, 1.2, and so forth. Remember to start on new pages. Guys, leave sufficient lines open. And extremely important, you need to reference your calculations when you use them, and you need to, when you take them to your PPE note, indicate to your marker where is this calculation 1, 2, 3 or 4. Right, okay, now we have included our template, my timelines. I'm going to do this throughout my workings, and now I need to work through the information from the top. Right, we now need to start working through the information from the top, and we need to focus. We need to complete our PPE note. Okay, guys, think about this, your PPE note. Now, the first paragraph, background info only, new hand sanitizer plant. Okay, you'll remember they've indicated to us that they had purchased this and they received control. It was delivered to the premises, property A, on 1 May 2019. Medex immediately commenced with the installation of the plant, which took a substantial time to complete, and the plant is a qualifying asset in terms of IS 23, and therefore we can capitalize this 4450. Again, how important, guys, remember, work with a plan of action. On a new page, I will indicate that this is my calculation 1. This is my calculation of my plant. I now know that I have my borrowing costs. Now, please, you don't have to write out all of this. I do this for you to be able to follow me. That's all, right? And this is the 44550. Okay? I can tick off that amount. I have used this. The following information relates to the acquired machinery and equipment. Payment to the supplier on 31 August 2019. Remember, our normal credit term is 30 days. Our future value, therefore, this will be the value that will be paid on 31 August. Okay, so they received this on 1 May 2019. Therefore, May, June, July, August, we are looking at 4 months. We need to determine the present value. And the rate that we need to use, they've provided this to us. Remember, in the additional information section at the bottom, when we look at this, A fair annual discount rate is 10% per annum, compounded monthly. We need to calculate this based on our months, right? Therefore, let's determine the present value. In our calculation 1, I will include a smaller calculation and I will indicate that this is the actual price that we had to pay. I will include that I know my future value will be this 4910,324. My period will be for 4 months. My rate should be the 10% divided by 4. Therefore, this will be 0.83%. Therefore, my present value will be an amount of 4,750,000. Right. And we can tick off this amount. Cost of transportation to the factory. Okay, so guys, let's say for example, you are unsure which of these costs should be included in the cost of your PPE. What do? You freak out? No, you breathe. You have your textbook with you. Right, you open your IFRS 16 contents page. You know that we need to determine what is the amount to be included at recognition, therefore the measurement. And we need to open our paragraph 15. Therefore, open paragraph 15, measurement at recognition. It indicates the elements of cost, and it states the cost of an item of property, plant, and equipment comprises of the following. And guys, you can scan through this to identify if these costs should be included or not. Okay, so this is important. This is how you use your standard. Now, when we refer to our scenario, okay, we have cost of transportation to the factory. Yes, your transport cost. Remember, because this is part of the cost to get your asset to the location and condition necessary to use the asset, right? Therefore, we can include our transport costs. Now, I don't want to make use of green. I want to make use of black. Okay, so we have our transport costs. Remember, you don't have to write this out. I do this because I want you to be able to follow my calculation. Okay, next, tick it off. We have used this. Next, cost of external engineers, 73726. Yes, this should be included. And we need to transfer this. And this is our costs in terms of our engineers. And 73726. We've ticked it off. We have remuneration of the employees assisting with the installation. 1 of the 10 employees is administration personnel, and you may assume that all 10 receive the same remuneration, therefore 33,200. We only need 9 out of the 10. Therefore, this relates to the employees, right? And this is an amount of 31200 times 9 over 10. And this is an amount of 28080. Our useful life of the plant is 20 years. We have a residual value of 330,000. And very important, guys, we have our IFRS 1 costs. Okay, so they indicate to us that this is 900,000. We need to determine what is the present value, and then this we need to add to our asset. IFRS 1, we have a future value of 900,000. We have a period of, guys, remember, they indicated to us 20 years. Therefore, times 12, and this will be 240 months. Our rate is monthly. Remember, they've indicated to us that this 10% is compounded monthly. Therefore, our present value will be an amount of 122,815. You with me? Okay, so this is our IFRS 1. Remember, we need to capitalize this to our asset. we can tick off that 900,000. Then they indicate to us, as part of the commissioning of the plant, the engineers tested the functioning of the plant at a cost of 200. The quality sanitizer produced during this time satisfied the requirements, and they've indicated to us, guys, that they have this 9,600 proceeds that they donated. Okay, now guys, the testing costs, should this be included? Yes, we need to include this. Again, if you're not sure, you need to refer to your principles. Okay, we need to include this. Paragraph 17E, cost of testing. Okay, therefore let's include this, our testing costs, and indicate your calculation. They've indicated to us that this is the 200, but we can't include the 9,600, guys. Remember, because they've sold this, they donated the variance, or not the variance, the 9,600, and this is 12,600, and we can tick off this paragraph. Okay, next paragraph. The plant requires an inspection every 2 years. At initial recognition, it was estimated that the first inspection costs will amount to 72,000. Now guys, they estimated this at initial recognition. Now if you think about this, let's just take another scenario. You purchase a vehicle, okay? You buy this vehicle for, let's say, 100,000. This is just an example, guys. Okay, you buy this vehicle for 100,000. Included in that 100,000, you have your 5-year maintenance plan. But let's just say this is inspection. Okay, now that is included in there. But if we need to distinguish between the cost and the 5 years plan, how do we do that? We need to use the estimated value, because the vehicle we will be able to use for longer than 5 years, but we will have to inspect the vehicle within the next 5 years. Therefore, we will have to take out this 72,000 when we determine the depreciation of our plant, and this 72,000 will be depreciated based on the 2 years. Therefore, in my calculation, what I am going to do is I'm going to indicate here in the calculation that this is my inspection costs, and this will be the 72,000, because I need to remember that I need to depreciate this based on the 2 years. This is still part of my cost. If I capitalize my asset, this is still part of the cost. Therefore, if I add all of my details in terms of my purchase price, just quickly want to indicate this to you. Therefore, when you look at this, my total purchase price with all of the additional costs is the 5050,001. My inspection costs will be the 72,000. Now that 72,000 will be depreciated based on the 2 years. My 4978,001 will be depreciated based on the useful life, which is the 240 months. Okay, therefore, if we now include our depreciation, and this will be the 4978,001 minus the residual value, which is an amount of 330,000. Right? You with me on this one? Okay. Divide this by the 240 months times 6. Guys, let's just quickly check. Is this actually 6? They've indicated to us, yes, that the asset is available. It has been signed off on 30 June 2019. Our year end is 31 December 2019. Therefore, 6 months. Right? You with me on this one? And therefore, our depreciation will be an amount of 116,200. And this depreciation only relates to the 4.9 million. It does not relate to the 72,000. Okay, you with me on this one? Now we need to include our inspection. I'm going to add this back, the 72,000. Remember, this is included in the 50500001. So guys, I've identified that this is a 0. This should be a 1. Okay. And the depreciation in terms of my inspection will now be the 72,000 divided by the 2 years times 6/12. And the depreciation will be 18,000 Rand. Now you will identify that I've included a column for my depreciation on the right side. Okay, if you do forget or you don't include a column, just keep track. Where did you calculate your depreciations, please? Okay, so my depreciation 116,200 and 18,000. I am going to transfer this to my column 116,200, and I have the 18,000. Now, why do I do this? Remember, I'm busy with my PPE note. In my PPE note, if we look at this, I will have to include here my depreciation. And now that I remember, guys, I have the additions, which is the plant. Okay, but I still have to calculate the total additions amount. Now, let's refer to our scenario. We can tick off this paragraph. Next paragraph. They indicate to us on 1 June 2019, Medex acquired safety equipment for the plant amounting to 222,000 from a nearby supplier. On that day, Medex also acquired spare parts of 150,000. Therefore, guys, Medex acquired 2 things here. Number 1, the 22000, which is our safety equipment, as well as the spare parts. Therefore, we need to capitalize the safety equipment. Therefore, let's transfer this to our calculation, and this will be our safety equipment. This is the 222,000, right? Okay, and we have our spares. And they've indicated to us when we look at this that 25% of the spares relate to our minor replacement parts. Okay? Therefore, if 25% relates to the minor replacement, we need to capitalize 75%, which will relate to the major replacements. Therefore, in our calculation of our plant, our space, we have the 150,000 times 75%, and this will be an amount of 112,500. And they indicate to us in the scenario that this will be utilized for 6 years and requires no major installation. Therefore, we are able to identify that the depreciation rate for our safety equipment and our spare parts will be based on the 6 years. Therefore, the total will be the 334,500, and our depreciation will be that 334,500. Divide this by the 6 years times 12 times 6 months, and this will be depreciation of 27,875. Again, I'm going to transfer this to my depreciation column, 27,875. Right, you with me? Okay, so guys, when we now look at this, important, we need to determine what is our actual additions in terms of our plant. We need to determine what is the amount that we need to include as an addition here, guys. Not the building, sorry. I'm looking at the scratch from a different angle. Okay, of the plant, right. Therefore, when we look at this, we have the 5050,000. We've excluded the inspection costs purely for calculation of the depreciation. We've included again the 72,000, therefore it's in and out. And we need to include our safety equipment, 334,500, 334,500. Therefore, when you look at this, our total additions will be 5384501. Okay, we need to transfer this to our PPE note. You will identify that I've included a reference calculation A, 5384501, and we need to indicate that this is from my calculation number 1. But what is important to identify, guys, is if you do remember, and let's say, for example, you did not remember this at this point of time. Guys, if you include, let's say, for example, the 5384501, and then another line item here, that there was a change in our IFRS 1, and therefore we've capitalized that change, you will still receive your marks. I'm going to include this as one line item because technically this is the correct way to do this. Remember, we still have to include our IFRS 1 change. Okay, but the total is the 5.3 million. While we are busy with our plant, it is easy for us to quickly add our total in terms of our depreciation, and this will be the 162,075. And let's immediately transfer this 162,075 to our PPE note. We need to take this to our PPE note, depreciations, and this is 162,075, and this is also from our calculation 1. I have highlighted this blue, therefore my marker should be able to identify this. If your schedule marker won't identify this, reference it calculation 1.1. Okay, now let's refer back to our scenario. We are able to tick off the paragraph relating to our safety equipment and our spare parts, right? I want to look at the change in IFRS 1. They've indicated the change to us and the additional information. They've indicated here that on 31 December 2019, your team therefore indicated that the plant has a remaining useful life of 10 years, whereafter it will be dismantled at a cost of 600,000. Now guys, what do we do now? We need to determine what is the balance of our IFRS 1 provision at the end of 31 December 2019. Okay, and we need to determine now what is the new IFRS 1 provision at the end of 31 December 2019. Therefore, we need to determine the present value of that 600,000. Right, you with me on this one? Okay. Right, I've included this as my calculation 1.1, IFRS 1. You will remember that we have calculated this, guys, in our calculation 1. I've just copied my calculation. Remember, this is our calculation 1, and we have our IFRS 1 costs here, guys, 122,815. Okay, therefore when you look at this, our IFRS 1, 122,815 on 30 June 2019. Okay, so now we have a change in this value, but first we need to determine what is the present value of the remaining IFRS 1, the provision. Okay, how do we do this? We know that our future value is still 900,000. Our original period was the 240 months, but since then 6 months has passed from 1 July 2019 to 31 December. therefore minus 6 months. And this will now be 234. Our rate will still be the 10%. Therefore, our present value will be 129,085. Okay, now look at this, guys. Now, our revised, our new value. Now, this is the new value at year end. They've indicated to us that our future value will now be the 600,000. Okay. Our period will now be 10 years. Therefore, 10 years times 12 months, and this will be 120 months. Our rate will still remain to be the 10%. Therefore, our present value will now be an amount of 221,164. Therefore, we are able to identify that there's an increase when you compare our old value to our new value. If you think about a journal, which is not required, you will have to debit the asset and credit our provision with the difference, the 221,164 minus 129,085, and this will be an increase in our assets value of 92,079. Therefore, this will be an increase in our assets value, and we can transfer this to our PPE note. Therefore, when you look at my PPE note, on the right side, I've transferred my amount 92,079. I have a total of 5476,580, and I've included this as an addition.